Mr. McNally, Mr. Brazil, both of you mentioned the IMO 2020. In fact, Mr. McNally, you said that that was a whole section of your talking points that you weren't able to get to due to time constraints, so I'll give you that opportunity now. I also referenced these IMO, International Maritime Organization's low sulfur standard. This is set to take effect in January of 2020. The standard will reduce sulfur limits in marine fuels. Certainly look to the environmental impacts, the positive impacts on health. But I think the concern that is out there is that compliance isn't moving along at the expected rate, which could pose a burden going forward. And since we're talking about where do we go from here, those unknown factors, or perhaps those things that are out on the horizon that may have some unintended consequences, I'd like an opportunity to talk a little bit about them this morning. Can you walk us through the IMO 2020 standard, the options for compliance, and what it might mean for the middle distillate markets, and then whether you share the concern that I have raised that we could potentially see some price impacts, increases where we perhaps might not expect it, whether it's in my state for those who rely on diesel for heating or power or transportation, or the folks in Pennsylvania that rely on home heating fuel. So can we have a discussion about this IMO 2020?
Thank you, Senator. Yes, the oil industry and market has been preoccupied with this issue for the last several years. Subject for a whole afternoon's discussion, but on January of 2020, the limit on sulfur emissions for what we call marine bunkers, so fuel used in heavy ocean-going ships, this is across the ocean now, will fall from 3.5% to 0.5% sulfur, so very, very clean. There are two options to comply, really. One is to put a scrubber on your ship, so you could still use the dirty stuff, but you scrub away the sulfur emissions. Folks agree the shipping industry has not nearly installed enough scrubbers, and it's too late to put scrubbers. A small fraction of the ships are going to have scrubbers. So the most likely compliance option is to get cleaner fuel in your ships. So we're going to see a scramble away from what they call heavy fuel oil, what they've been using now, that bottom of the distillation column, that heavy gunky fuel oil, 3.5% sulfur, 2.5%. They're going to stop using that, and they're going to go and they're going to put lighter, much lower sulfur diesel, mainly diesel fuel, in their ships to comply. There is no phase-in, there's no credit trading, so it's overnight, you just got to comply on January 2020. There is a concern, and I know the IEA has raised this concern in their reports, that the industry is unprepared. We haven't seen the scrubbers being built, and we don't have at the global level, the equipment to make that enough low sulfur fuel. So part of the solution, unfortunately, will be the shippers coming to the folks who are currently using low sulfur distillate, home heating oil consumers, road diesel users, farmers and their tractor equipment, railroads, airlines. This is all the same kind of fuel. We've already gotten that to be really clean. And they'll say, you know what, we don't have enough, we've got to comply, we need to bid it away from you. And that'll cause price increases. I think the IEA has indicated they expect a 20 to 30% increase in the price of distillate next year. Others have raised the concern that the actual crude price could go up because the refining industry will sort of scramble to run more crude through the refineries, and they're already working pretty hard to make more distillate. So while the environment will benefit, while human health will benefit from getting this sulfur off of these ships, and our complex refiners, on the Gulf Coast especially, they're going to do very well because we specialize at making this high-quality, low-sulfur distillate. Some folks are going to do very well. But for consumers, I think there's a real risk that for a period of years now, the lack of preparedness for a January 2020 start date will lead to a substantial spike in the price of consumer fuel on shore.
So potential for 20 to 30% increase. You factor this on all of the other global uncertainty, the potential for disruptions. That's not a very cheery way to end this hearing. Mr. Brazil or Mr. Satomori, do you want to comment in terms of what we might be able to do to avoid these increases?
The problem is exactly as Bob mentioned. It's the fact that we're going cold turkey on a particular day. If this had been phased in both the shipping industry and the refining industry would have been able to accommodate things. So I think whatever has everyone concerned right now is they're going to wake up on January 1, 2020, and the rules are all going to be changed. If there was some way to be able to mitigate that, and frankly, I think there probably will be a way to mitigate that, there's probably going to be so much non-compliance that there'll have to be some sort of accommodation made. I think that's likely, and John and I have talked about it some. I think John has numbers figured in, like 25% non-compliance into the plans that Turner Mason has put together. We think the same thing is going to happen. Ironically, what it does is it makes light crude, shale crude, more valuable, heavy crude, like Canadian crude, less valuable. So it's actually a good news story
So it helps
for U.S.
us
producers.
in the United
In
States.
the United States, for producers, it actually helps us.
Helps the producers,
It helps the producers.
not necessarily helping the consumers.
Oh, if you've got folks in your state driving diesel, you need to be prepared to what you need to say to them, because their diesel prices are going up on January the 20th.
Well, and that's
January
my
the 1st.
state. And people in Alaska would look at this and say, well, wait a minute, this is July of 2018. You guys have plenty of time to figure it out. Mr. Satomori?
I agree with the other witnesses' views. So we also understand that not enough investment is happening on the kind of a ship, the scrubbers. There's another option using LNG as the fuel for the maritime, but it takes time and also requires the enormous amount of infrastructure investments. So what will probably happen at the start of this new regulation will be the kind of the industry will rush for limited amount of low sulfur fuel oil and also the maritime diesel. And by the way, probably this low sulfur fuel oil will have to depend upon the kind of the same molecule as the maritime diesel. So there will be a kind of a mismatch in terms of the refineries' procurement of the certain types of crude. So there will be, so we expect that even though we have not come up with any specific kind of numbers, percentage of oil price increase, that's we don't do, but we expect that there will be a very kind of tight supply-demand situation on the very specific types of the crude fuel. So that's what we are kind of concerned about, and we try to keep track of it. Thank you.
Well, coming from 3 maritime states here, Washington, Maine, and Alaska, clearly pay close attention to this. Mr. Allers, did you want to add anything to this? You were referenced earlier.
Yeah, I agree with what Rusty said and what the other panelists have said. I mean, we're definitely going to have a bump in distillate prices. It will cause a bump in crude prices, but then there's headwinds that will potentially bring those crude prices down. So where crude price set is difficult to say. Our view, and it's purely a guesstimate of what's going to happen in 2020. This is really the first global-wide product specification change. We've had low sulfur gasoline, low sulfur diesel in the U.S. and Europe and other countries in Asia and other places. But this is a global-wide specification change that's impacting 4 to 5 million barrels a day of bunker fuel, and so it's going to have a huge impact on the market. And there are provisions for waivers. I do agree with what Rusty said, that the market will work itself out. When they see the problems that are going to happen, I think we're going to see use of some of that. I mean, the IMO is the one that has to obviously take action, and we'll probably see some steps taken by the IMO. And the U.S. as a member of the IMO certainly can have a voice in that to help provide some sort of way of phasing this in, because there's going to be a disruption unless something's done. And some of it's going to come, and our number at 25% he quoted on noncompliance, that's a guess. It could be higher, it could be could be a bit lower, but it's going to be substantial because there's not a real uniform enforcement mechanism in the open water. Every country's deed to enforce on their own. It's going to be enforced by the U.S. and Europe, but who knows what's going to happen everywhere else. So
My time is well over, but Mr. Bordoff, you wanted to jump in here real quick?
Well, if I may, I was just going to say, I agree in part. I think there are a few mitigating factors. First, we shouldn't forget the significant public health benefits that come from reducing SO2 emissions. The increased demand for diesel is coming at a time of some headwinds for diesel demand globally as cities move away from diesel. And third, the industry has known about these rules for many years. Some have taken further steps than others to prepare, including many U.S. refiners and U.S. shippers. I think injecting an element of uncertainty about delaying them now could hurt the companies that have taken steps to prepare, and just injects an element of uncertainty now where people are starting to get ready for this, and then maybe they should wait, and maybe they're not sure. That could actually worsen the transition period. As Rusty said, if it's not the case and the rules are far more disruptive, then we think the IMO has the authority to issue waivers in case of lack of availability of low sulfur fuels. And like with new pipelines being built in the Permian, it takes a year or two, so there will be a period of adjustment. But I think history suggests that these often resolve themselves in response to price signals more quickly than we think they will.